Welcome to Preserving Your Wealth with Mike McCormick, where we talk about smart ways to invest and preserve your money. Mike is a registered investment advisor with McCormick Financial Advisors in Bozeman, Montana. As an independent fiduciary, Mike does not receive commissions from any of the products or investments mentioned on this program. Consult a professional before making any investment decision. You can find old shows archived at McCormickFinancialadvisors.com. Learn, participate, interact.
And Mike McCormick's in the house. How you doing, man?
I'm doing great.
Good morning.
Thank you for having me. Hello, Shane.
Good morning, Michael. Thank you for being in the house.
It is my pleasure. My pleasure. Beautiful day out there today. We got the sunrises coming in a little bit earlier. If you're an early riser like I am, it's nice to get a little natural light on the project in the day.
That would be it.
Yeah, sure looks like winter out there.
Yeah, it does. We've got the market set records yesterday. Now it's tanking today. What's going on, Mike?
Oh, you wanted to talk about the stock market? I wasn't ready for that.
Let's start. Let's start there, and then we'll move on maybe.
Things are fantastic.
Yeah.
I mean, things are fantastic in ways that I'm 48. I'm soon to be 49. So I haven't seen everything by any means. I've seen a few innings of the game. There's people listening that've seen much more of the game. But think about the dot-com boom. Think about the boom going up before 08, 07. It seemed like those booms to me were, the dot-com boom was about these dot-com stocks. We had the pet sock puppets and the Super Bowl ads where you're like, oh, my God, really? And it was this one central thing. In the 08, 07, 08 boom, that was housing related. It felt like to me. It permeated a bit more of the economy. But today's boom seems honestly like, people have extra money. The majority of people have extra money. If you don't, I'm sorry. I empathize. I never feel like I have extra money either. Yeah. And there's no place to put it. There's no place to put it that's a good deal. So you find the places that you're comfortable with. You find things that, advisors maybe say you should, and you plug your nose and you buy it. And so every corner of the economy is pretty well above fair value, if you ask me. There's small pockets of things that look different, and that would be primarily in the energy area. They look different because their valuations have not participated. There's, smaller companies, international companies that are more fairly valued. But generally, when you talk about meat and potatoes right now, things are 20 times earnings on the rosiest glasses. We just had Chairman Fed Powell come out from the Federal Reserve yesterday, possibly one of the more independent appointees out there. And he's saying that things are great. He's talking about what he's going to do if there's a recession that comes. There's not a lot of room for interest rates to move. He's going to do the quantitative easing thing that we do with our balance sheet. The boogeyman is out there. He's, the boogeyman is in terms of your own personal views, how the election's going, coronavirus, climate change, everybody's got a boogeyman out there. The longer term boogeyman is fiscal sustainability. We really would like to see the trickle down economics, give it to us now and make it up on taxes later, actually start to produce. It'll be interesting as we come through tax season this year to see what receipts look like, if we're able to pay back the cuts that we did. The new budget came out. There's a lot of cuts involved in that as well. So I don't have a lot of concerns for clients yet. I'm getting a lot of clients that are concerned. And I'm getting a lot of emails saying, hey, maybe we should go to cash. And these are generally the more liberal clients that I have. I walk both sides. There is no aisle walking, I suppose, in my practice.
Yeah.
It actually does better for me if I don't pay attention to the political news because it's so much noise and so much of his promises that even if they win, the promises don't come to fruition anyway. So why would I hang my hat on that?
I wonder how obviously politics does play into the market as people, somebody says something and the market will go up or market will go down or.
You and I both maintain that it doesn't matter.
Yeah.
However, this time might be different, right?
Yeah.
I mean, the Trump thing has probably allowed us to get to this valuation where we are today.
Do you think more people are positive that we're going to hit 30 sometime this year as opposed to hitting 22?
Yes.
I think so too. And I think Shane would agree with that. I think Shane thinks we're going to 30, right, Shane?
Oh, yeah.
Yeah.
I mean, 30,000 Dow is a 2% clip away, which can happen That can happen in a week of slow news. And that's how it has been happening. Tom, you pointed out, hey, we're down today. We're down. Why are we looking down? And we haven't opened up yet, but this is the pre-market trading future, blah, blah, blah.
Yeah.
And I said, oh, good. George Carlin, this is a little bit crass, so you can cover the ears of the miners there, but George Carlin has just incredible wisdom out there. And he says, how do you know when a fly is passing gas? Because it flies in a straight line. and I look at that as a warning sign for the stock market also.
Yeah.
Because this thing shouldn't go in a straight line. It's healthy when there's a day where people are, I'm going to sell a little bit. There's a lot more coronavirus cases in China than we thought.
Yeah.
Or Tesla's selling $2 billion worth of stock. That's a warning sign. We need to reallocate. That's good, healthy stuff. For the average person listening, you're putting money in your 401k and you're buying a basket of things, and hopefully it's rebalancing. And rebalancing, I got to tell you, for the past 10 years, the rebalancing math has worked against you. This is one of the big things in our industry.
Yeah.
We try and find things that we can hang our hat on, that we can sort of enforce, and the regulators can say, well, everybody should be having a diversified portfolio because of this. Everybody should be rebalancing your portfolio. Well, guess what? If you've been rebalancing your portfolio for the last 10 years, you've been selling all your tech companies and buying all the other things that haven't been making you money.
Yes, I have.
Just when we think we get it figured out.
Yeah, I know. Yeah, there's no way to figure it out, unfortunately. But
if you don't play, you can't win.
Yeah. Well, one of the things we talked about last week that Shane did a little research on was stock splits. So, Shane, can you enlighten us on stock splits and who the companies were that split a lot and what happened to them?
Sure. I just want to mention before we jump there, the euro's down an entire basis point now.
Wow.
$1.08.
And
So
sale on
it's
French
broken that
Bordeaux.
Yeah. That's what's causing all of this, I think. Let's see. Understanding stock splits. Well, I went through it, and the preeminent reason for splitting a stock from the position of a public company most often is to provide lesser price stock and more of it. So if they have 1 million shares out and they split it 10, and it trading at $1, well, we'll say $100, then they split it 10 for 1. Now you have, if you had 1,000 shares before, now you have 10,000 shares, and worth the same amount because the price would be $10. So
It's like turning a dollar into dimes.
yeah, and there are a lot of reasons for it, the balance sheet reasons and so forth. But the two great examples that I found that I wanted to mention, June 2014, Apple split its stock 7 for 1. And the reason was to make accessible, shares accessible to more investors. The interesting thing, the price was the open market price dropped to $92.70. So if you look at that as an example today, and if you had 1,000 shares and now you have 10,000 shares, well, the stock's 327. So you now have $327,000 worth of stock. Pretty good deal, So it's another stock split that I looked at that I thought was pretty incredible was Citicorp, and this one's interesting, and the reason I felt it was interesting was because of the number of shares that were out on it, and it's rather remarkable because this is sort of incredible. I mean, the numbers are incredible. So May 2011, they reverse split their stock. So in this example, they took the number of shares they had out and they reverse split it 1 for 10. So for every 10 shares you had, you got 1 share. And they did it, they said, to reduce the share volatility. Well, yeah, maybe that's so because they had 29 billion shares out.
Wow.
So
that's a lot. That's a lot.
So now they're back down to around 2.9 billion, and so if you had 1,000 shares, you'd have 100, and Citicorp is 79.33 today. So that's a context of stock splitting, and I could go into more if you want. But first, having said that, we'll see what Mike's got to say because it's his hour.
Yeah. Okay. Any comment or
Yeah,
thoughts on it?
I mean, I don't follow things related to stock splits. It is a sign of a company doing well, and a reverse stock split's generally a sign of a company not doing well. And they are doing balance sheet things, and it can influence the price of the stock. But for investors that are long, that I think are mostly listening to the show, it's more of an academic interest thing. Warren Buffett's decided not to split his stock, and Warren Buffett I actually should I'll look this up, but it's what's one share of Warren Buffett A, Shane?
600,000 shares, but him and Munger control the company, 60% of the stock, and there's only 750,000 shares out. The average shareholder in Berkshire Hathaway owns one share.
Yeah.
Yeah, I was going to say it's 600 grand or something per share, isn't it? Something like
Yeah,
that.
yeah.
I forget what the last total I looked at was, but it's getting up there.
But it also takes in $400 million a week in cash. Okay, so you're talking about 1.6 billion a month. So you're talking about like 19 billion a year in cash, just cash.
And it's a good stock to talk about today because in this growth momentum environment that we're in, momentum meaning fashion show popularity. Think high school lunchroom, right?
Prom, yeah.
Like who's popular
Who's
today?
sitting with who?
Those are the stocks that in this market are doing well, and those are signs that there's danger in the water, really. And Berkshire Hathaway is not popular. He and Charlie and Warren are in the corner, at the D&D club or robotics club or something like that, and they're not getting the date to the prom, but they might be a way that people can stay invested in a market like this and have some comfort that there's a company with a ton of cash. If we get to tough times, they're going to get the sweet deals to jump on them again. It's one option to think about if you're scared of still owning. Right now, Apple and Microsoft together account for 10% of the world stock market, I believe is what I read the other day. So.
All right. We got to take a quick break. Hey, we're brought to you by the Club Tavern and Grill, voted Bozeman's Choice Best Happy Hour. Club Tavern and Grill offers happy hour specials every day of the week. As one of Bozeman's most popular happy hour spots and sports bars, you'll be sure to find something you'll love from their extensive drink and food menu. They also serve breakfast, lunch, and dinner. They got a kid-friendly menus also available. And so to place an order for pickup or make a reservations for parties of 6 or more, go online to theclubtavernandgrill.com, theclubtavernandgrill.com. Check them out. They're on the Best Western Grand Trail on North 7th across from Walmart. It's where the locals go, and tell them Tom and Shane and Mike sent you in. And we'll be right back with more right after this. 21 minutes after the hour, it's Thursday, February 13, 2020. Mike McCormick's in the house. Shane Metalman has a point of order on the line. What's up, man? Let me turn you up. There you go.
Having made mistakes here in the last few, $341,000 is the price of Berkshire Hathaway A-class shares.
341.
Yeah.
I wonder why I was thinking it was up in the 600s.
Me too.
I thought it was too. So.
Maybe they split and we didn't know it.
Yeah, that's probably what they did.
I'm sure it is. I got to go to another place. I'll be quiet and I'll look again.
Talk about Citi with their reverse. Citi did it because they their shares dropped below $5 a share, and funds were dumping them because funds won't hold sub $5 shares. So
that's right, and
great point.
That's right, and they'd also issued a bunch of shares to the government to pay back their debt.
Yeah. So, all right. So
that is the magic number, $5. It's a funny one that hasn't been adjusted much, but that's why they call penny stocks below that, and you get the Jordan Belforts and Wolf of Wall Street stuff happening down below it, where there's less regulation, and then you get more transparency as you get larger companies. And I'd like to put a plug in there for publicly traded companies. I do small amount of non-traded business. That means things that don't hit the stock ticker symbol. If you can imagine, in the world of stocks, I always say there's 3,776, I think, publicly traded companies over $5. And that number, of course, is changing, so you can't quote me on that. But there's not a lot. That's not a ton for the amount of liquidity that's out there for the number of people looking to get good deals. And there's at least 400,000, if not 4 million people that are as smart as myself or a lot smarter out there trying to pick the right ones. And so there's not a whole lot of efficiencies to be gained gained by becoming an expert in this game. But if you look at the private investment world, the private companies, the things that you see around your town that are growing, this is the construction companies where their logos everywhere, or the real estate development companies where their logos everywhere. There's investment opportunities that happen within companies like that, and you just don't get an opportunity to participate in them. And there's an order of magnitude or two order of magnitudes. There's hundreds of thousands of these companies looking for capital, and there's very relatively few people that are looking to invest their capital in those companies. And so there's a tremendous amount of upside to becoming a private investor in one of these companies or multiple of these companies. It's extremely risky. It's non-transparent. It's difficult to understand. There's longer time cycles, and there's just inherently more risk in it. So that's really the main reason why I don't do it. I don't have the time, risk appetite, and it's not the value I deliver to my clients. But when we're looking at, okay, is the stock trading at $5 above or below, and what's the option? We can't ignore the fact that there's a whole universe of other ways to invest your money out there. And for people that are listening to this show, you might have neighbors, friends, family members that are doing really well in their businesses and have an opportunity to invest some of your capital into it. And I think generally the answer is that you should think about allocating a small portion of your money to that if you're able to, because those can be the deals that do make you rich. Nobody that I know got rich investing in a diversified portfolio of stocks. They all made their money investing in real estate or directly, not through a fund, or they invested in private companies that they owned or that they had access to.
Yeah.
Bit of a segue, but that's a bigger, broader conversation. When I visit with people, we have your portfolio. If it's in your retirement account, I want you allocated as risky as you can tolerate. We did have a text question where somebody was asking some generic questions
about retirement plans. Yeah,
retirement plans.
Mike, you review a lot of retirement portfolios. Over time, have you noticed that most retirement plans are typically overweighted or underweighted in any specific area? What allocations do you find you recommend more of as your client portfolio matures? In other words, we didn't have robotics years
Time goes
ago,
on,
so
right?
you might say, okay, this company's gone
Here's
full
an old
robotics,
dusty one that we haven't gone through.
Or Tesla, for example,
Right. And so here's one where I almost need to play my disclaimer again, because this is not advice for you. This is advice for, the question is, what do I see?
Yeah.
My particular bias is that I see most retirement portfolios not risky enough, too balanced. And here's why. Bonds make more than stocks. They always have. You just have to have enough time to let it happen. So we blend in bonds so that people don't throw up on the big cycles and they can smooth out the ride, and the 60-40 allocation is the sweet spot. That math is all true, but it doesn't override the fundamental math that you're going to make more money from your stock portfolio than from your bond portfolio. And so most retirement plans are being delivered with blinders on. They're not looking at the whole investor. They're not looking at the fact that this person might have $100,000 in cash and might not need to have a big bond portfolio in their retirement. They might own their house. They might own several houses. This might be the one place where they have an opportunity to grow their money like the market did last year at 27%, depending on what you were in. But they might not have, because some advisor that just saw one leg of the elephant said, oh, you're this age, you're hoping to retire at this. Well, then we need to make it a balanced or a conservative or something. Now, this advice makes great sense today when we've had a 10-year bull market. Tomorrow I could be, crying in my cheese because things turned the other way. And especially right now, bonds are a really difficult thing to get excited about at today's interest rates. Unless you're thinking that we're going to go negative, the upside on bonds is really capped. So yes, to answer the question, most of the retirement portfolios I see, I'm like, how about we have you hold more cash at a local bank and CDs? And you know that I'm a fan of that, because then you have opportunistic money. You have your emergency savings. You can pay down your mortgage and get a guaranteed after-tax 4% rate of return. But in that portfolio of your retirement, go ahead and don't gamble. Don't let it rip, but say, hey, it's going to be 10, 20 years before I drain that whole thing out of there. Maybe we should have some exposure to emerging markets. Maybe we should have more tech exposure.
Yeah, that would be... I think that seems to be the direction we're going. We're going to be more tech than, in 10 years.
Right.
I mean, you can't imagine.
If you look at how the sectors have changed over the past 2 decades of the S&P, demise of energy, demise of several sectors and just the absolute dominance of tech. Healthcare also is sort of something that we are talking about as having more upside, despite even changes in regulations coming through.
Sure. All right. All right, that's going to wrap it up for this portion. Mike is going to stay with us. Shane's going to stay with us. I'm going to stay with it. And in spite of your cards, letters, and phone calls, we'll be back, like it or not, right after the news at the bottom of the hour. So stay tuned, and we'll have more with Mike McCormick of McCormick Financial Advisors right after this. 24 minutes for the top of the hour. Mike McCormick Financial Advisors in the house. Shane Taubman, half man, half amazing on the line. Tommy Gullip, your morning mayor in the house. And, we were talking about portfolios, and we had another question for you, Mike. Let me...
it was more exciting than just talking about portfolios.
That's
it was
right.
really a stimulating discussion we were having.
So while you look that up, I'll
go ahead.
give you some examples. Aflac, March 2001, split 2-for-1. They're up 73% since then. ExxonMobil, July 2001, 2-for-1, up 72%. FedEx is the big winner. May 1999, they split 2-for-1. They're up 97%. Lockheed Martin Marietta, January 1991, 2-for-1, up 127%. PepsiCo, in May of 1996, they split 2-for-1. They're up 89%. And the biggest winner is Questar. June 1998, 2-for-1, 315% increase.
Wow. There you are. Why didn't we invest in those?
You didn't know me then.
That was true. I guess I didn't. That's my problem.
ExxonMobil trading at $61.
Yeah.
5 years ago was at close to 100.
Yeah.
Steady losses.
Steady decline. Yeah.
All the way down.
Pays a dividend.
It does pay a dividend, and I'm not an naysayer. I used gas to get here this morning. I did. Full disclosure. But gosh, I wonder what's going on in those boardrooms of those Exxon boys, because they used to be masters of the universe, and they probably still think they are, despite the numbers saying otherwise.
I would bet if they were smart, they're looking at alternative energy.
Absolutely. Algae, especially. Exxon spent $100 million in the last year just testing. Very close. We've talked about it.
So we have talked about it, and I've got friends that used to be in the research department for Exxon. They've done great science for years and years and years, but they've never done anything other than drill for oil.
Yeah.
Despite all this other research, they've never done anything other than keep to their knitting. So
and they're still going to need that. We're never going to be we're never going to live in a society without oil.
Well, we may. I'm not going to say never.
No, you can't.
You can't.
You need lubricants. You can't have industry without lubricants.
Hey, we're going to have a replicator like they have on Star Trek, and we don't need to worry about anything.
And that's all oil. And you can't have clothing without oil, and you can't lubricants.
Okay, I'm going to do some research if the Star Trek replicator runs on oil or not.
Okay.
80% of what you walk through.
Tom said never.
That's right. Never.
Tom said the word never. I jump on that one.
Never.
Yeah.
Now,
petrochemicals, baby. You'll always need them.
I agree, and here's my interest in this is that doesn't mean that you can make money on them.
No.
Right?
No.
So that is contentious, but right now in this environment we're in, with Larry Fink of BlackRock coming out and saying we are not going to support companies that have more than 25% of their earnings coming from fossil fuels, biggest fund manager on the planet, they're doing this in response to public demand. They're not doing this as a market leader thing. I mean, this is not one of those companies that's going to say we're going to change the world.
Yeah.
They're saying we think that this is the prudent move to make. And in watching how coal stocks have done, we're still using coal. We're still burning it, still going through on the trains. If you own a coal mine, you're still making dividends. But if you own a coal stock, you're sweating it. You might be making dividends at the expense of the stock price. So I am concerned that these are going to be, I'm not going to coin the term, but a zombie stock kind of thing where Exxon, it'll continue to exist. They'll continue to produce oil. They'll continue to explore and pump and sell it. But other than the dividend, there's no value to owning the company because there's no demand for the shares of that company. We talk about, why stocks are going up and we try and get clever about it. But the fundamental reason why a stock goes up is because there's more people that want to own it than want to sell it. You know,
Yeah.
it's the supply and demand. Anyway,
Yeah. Okay. Mike, what tools does the government have to fight the next recession now that they played the tax cut card?
yeah. Well, the government has fiscal policy. So tax or spend, tax or spend, tax or spend. We haven't really done the spend part. And there's been infrastructure talk for a long time, and there's various bills, and you guys are way better at knowing this than me. But, from what I can see and from what I read, there has not been a fiscal stimulus package that's happened since, I don't even know, Clinton or Carter.
Bush had one, Clinton had one,
Yeah.
Obama had one.
I mean,
The shovel-ready
Bush Jr.,
jobs,
right.
all that.
But their numbers were pretty small. I mean,
Yeah,
we're
they
talking,
were. Yeah.
in the order of back in the New Deal sort of stuff. So that we could do that. We can always do that. We can always print money and go into debt for that. But primarily, we're looking to the Fed to do the work.
Yeah.
And the Fed has interest rates. And yesterday,
unemployment, yeah.
well, they have interest rates, and then they have their measure of buying bonds.
Right.
They can become a market participant would be the way to do it. And they can go in and they can buy everything to bring the price up, or they can sell things to bring the price down.
All right. We got to take another short break. Hey, I want to remind everybody that the Safari Club International, they are giving away free meat to all service members and their families with valid proof of purchase, or valid proof of service, I should say, while supplies last. They're going to be giving meat away on February 22nd at the Commons, 1794 East Baxter Lane in Bozeman, from 10 a.m. to 4 p.m. So if you're a service member, you want to show up out there with valid proof of service, your DD-214 or your, your current ID, I guess, if you're currently serving in the military, or your retirement papers if you're
I bet they'll take you at your word. I mean, this is one of those things
they
that I
probably
think
will.
is all
I don't know, but
honorable U.S. citizens.
Yeah.
You're not going to fake that one.
yeah,
We
I would
appreciate your
hope
service.
not. So anyway, yeah, don't be a John Kerry. Go out and and take your papers with you and have them take care of you.
What kind of meat are we getting?
It doesn't say. It just says their annual banquet and hunters expo. And it just says a meat giveaway. So I'm assuming it's probably game meat, I would assume. But maybe somebody will call and let us know. But anyway, if you like meat and you're a service member, past or present, take your proof out there. And
Sounds like a good program.
yeah, February 22nd out at the Commons, 10 a.m. to 4 p.m. We'll be right back with more with Mike McCormick, Shane, and myself right after this. 14 minutes before the top of the hour, Mike McCormick Financial Services in the house. Shane Taubman, half man, half amazing on the line. Tom Eagle, your morning mayor in the house. And let's see, we've got...
Correction.
Yeah, Mike, you said bonds make more money than stocks. Did you say that backwards?
I did.
Yeah.
And I apologize. That's a big mistake. So thank you for keeping us honest. Stocks over time have always outperformed bonds.
Yeah.
David Swenson, Yale endowment manager, has a great book out that basically says bonds are of no value to him. Now, he's looking for the endowment long term, not for the individual. But a bond is paper written by the issuer in favor of the issuer, and they have the ability to call it. The buyer, the investor, is usually at a disadvantage. Now, again, bonds play an important role in a diversified portfolio. If your financial planner is not willing for you to take more risk, if it's a financial advisor in this town, you should probably listen to him. There's probably a good reason.
Well,
I just want to make one observation there.
Yeah.
My observation is, with the exception of one major industry in your country, and that's the gambling industry. You made a fortune on junk bonds back in the 80s and 90s from junk bonds, where they paid, and they were called junk bonds because they raised money at 10 to 15% interest. And most of the casino companies that did that paid off those bonds like in 6 months to a year.
yeah.
Today's market junk bonds are all energy companies, pretty much, right,
That's
Shane?
right. Yeah, I know. I'm just making an
Yep.
observation.
No, for sure. No, this is good.
From our text line, 478-8298, come on, guys, you know you're wrong concerning future need for any petroleum-based products. I mean, after all, AOC says we're going to have zero carbon emissions within the next 10 years. So We stand corrected, I guess.
Yeah, that's right.
So
You won't have a country or an economy,
I
The
was
but
gonna
future is
say,
now.
Yeah, you'll
that,
be.
that that's what's going to cause the zero emissions.
I was gonna say you're gonna be kind of in. Yeah, you're gonna be in trouble, I guess. Yeah.
Just a little bit.
AOC is obviously already living in a fantasy parallel universe. So there you are.
Good.
Well, I don't know. Watching the debates,
It's just getting going. It's
yeah.
just getting going. And I have a text from a client today. You know, I'm worried about coronavirus. I'm worried about all these headline things,
Yeah.
which I'm not discounting. I mean, coronavirus could turn into World War Z, just like the Brad Pitt movie where everybody's running around eating each other.
Yeah.
But it probably won't. It probably won't. And we're seeing a big sell-off in Chinese stocks this morning.
Yeah.
There is no story that's going to get better emotional response than this virus outbreak.
Yeah.
It goes to the core of all of our fears.
It's gonna go, isn't it?
Yeah. So,
Yeah.
So yeah, this is the way it goes. This is the way the market goes. And I love seeing it like this because little pullbacks like this allow earnings to catch up. They get the people that are nervous to sell out, and the long-term people have an opportunity to have a more sustainable growth path.
Yeah.
That's
All
my
right.
story.
And you're sticking to it.
But it's being recorded. It's being recorded, archived on my website, so it can be used.
Well, ours too.
Right.
So yeah, we record every show. So there we are.
Yeah.
All right.
Well, I do appreciate being here. I got to run after this next break. Do you have another?
We do. Yeah, I got another quick announcement to make, and then we'll kiss you goodbye.
All right.
So,
Well, thanks
right.
for all the feedback and,
Yeah.
of course, the corrections. I love being kept honest on this show.
Well, hey, that's why we're here. The Bozeman Sunrise Rotary, they're accepting applications until April 1st from homeowners to receive free home repairs during the 2020 fix-up. This is the 11th year they've done this. Applicants must be low income to qualify, confirmed by HRDC as part of the applicant screening process. They also must be in Belgrade, Bozeman, Four Corners, Gallatin Gateway. Mobile homes are okay. Preference will be given to those over 65 years of age, disabled, or veteran homeowner applicants. So if you want to find out more, go to fixupfestival.com. Fixupfestival.com. They got a brochure there. They've got the way to get a hold of, get the application online, fill it out, and they're going to take applications till April 1st. So if you need some home repairs around there, or maybe you need new steps going into the house, or something like that, or
Even
maybe
the best built homes need stuff.
That's right, man. So yeah, if you're low income and you need some things fixed up, and you don't have the money to do it, maybe you should consider that. So again, go to fixupfestival.com. Fixupfestival.com. Shane and I'll be back in 1 minute. Thanks, Mike. Appreciate you being here.
Thank you. Everybody be well.
All right. We'll be right back. 7 minutes for the top of the hour. Shane, we got a few minutes here. Do we want to respond to the earlier caller about the demolition party? Why are you insulting people who love America? Why do you call them the demolition party? How can you be so crass, so horrible to a group of people that love America?
Well, it's a reference to what their party platform is, and clearly, Bernie's the leader, and how they're going to handle him and going into the convention. I called in November for a open convention because Tuesday the March or the 3rd of March will be clearly tell us where we're at.
Mm-hmm.
But the thing is I just. They've told us what they're wanting to do with the Green New Deal. I mean, they want to demolish the oil industry. They don't want to demolish the building industry. I mean, there's so many aspects of your economy that they want to change drastically, which is demolishing it. And I just, maybe it's an unfair term, and if I offend anyone, I apologize. But when you look at the history of the party of slavery, party of civil war, and Jim Crow laws, I mean, on and on and on, and party, of identity politics, if they can't beat you with a discussion, the only thing I feel upset about was that, he made comments and then he asked me to respond. And the minute I said something, he interrupted me like 7 times. He never even gave me a chance to respond to him. So, if you can't be tolerant of someone else's point of view or have a conversation, then, we've talked about this. You're being a bigot. And so again, if I offend anyone, I'm sorry. It's really meant to be a sly on the perception they're creating about their own party. And if they lose the African American vote, and that's all they're talking about, even on CNBC, you have Jones talking about it now, and Biden's depending on it in the South Carolina vote and so forth. But if these polls are, let's just say they're half right. I mean, they're 30 to 35% of African Americans are saying they're going to support Trump. Even if it's 15%, we all know, and historically, the party becomes a regional party. The East Coast to the Northeast, the West Coast, and the cities they control. And wow, that's a very sad thing if that happens. But it was interesting. Last night I was listening to the leader of the House for the Republicans, and they have 221 women running for the House. 221.
Yeah.
It's a lot.
Yeah.
That's a lot.
That is a lot. Yeah. All right. From our text line, 478-8298, a previous ranting caller was a blithering idiot, another loud, obnoxious, pretentious, self-loathing Democrat who wouldn't allow Shane to get a word in. Hey, big dog, you proved your point. The Democrats are the demolition party, as proved by your last caller who self-destructed on air. This was some great implosion, and that's from our pal Steve-O. Let's see. I think you have a responsibility to not be racist when you're on the radio. You should consider all ages that might be listening. Kids talking like you guys would be creepy. He wasn't intolerant. You should stop that bigot comment. Was random, and now you're flustered that you did not offer him another view. It's time. Kids don't listen to the radio much these days. Your reference to ages 12 to 51, well, I mentioned ages 12 and over. So the bulk of that would be older people. I believe kids are listening because their parents are. Kids go online. I'm a mother and have observed this. Less than 1% of their profits were spent on research at the time of the Gulf oil spill. No wonder they are where they are. Tom and Shane, I'm glad you never tolerate that which is intolerable. Steve-O. Okay, yeah. Let's see. What else we've got? Let me go back to some of these. If the Democratic Party is actively embracing Marxism, and it seems quite clear they are, then calling them the demolition party absolutely fits. That's my viewpoint. Signed, a politically incorrect country bumpkin. All right. Let's see. Tom's show and text line is the only place to hear other views on this station. Last caller was conservative, but he gets labeled liberal. This is why I don't call. If I don't fall in line with the Trump cult, get called that or worse. Let's see. I love it how the caller called in on his rant, claiming to be a conservative, but defended liberals on his whole call. Nice try, though. If he is foolish enough to think that the Democrat Party is not out to destroy this presidency from day one, he is kidding himself. He needs to move back to California or Colorado or wherever he came from. The Democrats are not out to destroy the U.S. The caller is delusional. If he cannot see it, accusing you and Shane of hate that you do not spout is typical of the left to try to get you to say something and get you silenced. You beg for people to call in instead of text, and now you have no answer. Shane gets called out and cries like a baby. Great call. I would like to personally thank all the liberals for listening to the show. As the popularity of the show has grown, the quality of the commercials has gotten much better. Thank you, liberals. All right. When they call you a racist, that means you just won the argument. That's from Bob. So, all right. So that pretty well catches us up. Maybe we can go on to local news after the top of the hour. Shay, what do you think?
It's your show, man. Well, I just follow behind,
All right.
flying the wall.
All right. All right. We'll have more, I'm sure, bigoted views after this. So stay tuned. We're having fun this morning. All right. So, hey, it's great to be here on a Thursday. Tomorrow's Friday. We'll have open lines all day long. Hey, don't forget, if you want to go to the Big Bash, if you want to go to the Bozeman Magazine Bash, text the word award to AM 1450 KMMS, AM 1450 KMMS, and get that going. So we appreciate it. Thanks so much. We'll be back right after this.